Today, we have a big prediction for silver and gold. We're fortunate to be joined by Mr. Dan Tinkham. He's a wealth strategist, wealth preserver. Dan, welcome to Ron's Basement.
Ron, it's a pleasure. Thanks for having me on.
So you're watching these markets on a daily basis, the silver, the gold market. You're trying to position yourself, your family, and I imagine your clients as well, to preserve wealth during a time period here in the future that could be quite challenging. What are you seeing out there that's piquing your interest right now, Dan?
Yeah, well, there's alarm bells going off everywhere, and it's I feel like a squirrel because as soon as one alarm bell goes off, another one goes off, and to try to keep up with the pace of information has become extremely challenging. But it's really important to listen to voices like yours, and if people resonate with my predictions and things that I think are going to happen, then I think it's important to start listening to those critical voices at this juncture. There's a lot of things happening biblically when you look around the world, potential global war. How does that relate to silver, the price of silver? What is the military doing when it comes to silver, things like that. So I'm gonna go out on a limb today and actually give your viewers some of my predictions, but not only the predictions, but also how I got to those numbers to try to quantify and give some reasonableness, because there's numbers all over the place, and I try to take a step back and say, all right, as an observer, where's silver now? Where should silver be? Where should gold be? Because we know that gold ultimately kind of drives the bus and silver's along for the ride. But we all know how the ride is. Right now we're feeling pretty nauseous and people want to get off. And the key thing is right before you want to get off is right at the time where you want to stay on. So, and I think we're in those days, and timing, don't try to time it. At the end of the day, in my belief, it's God's timing. We can all try to predict and come up with different scenarios. But I'm excited to share with your viewers my thoughts on the price of where gold and silver should be.
Yeah, and I liked what you said because I think it's true. A lot of times, when it feels the absolute hardest to hang in there, or it feels the absolute hardest to maybe add a little bit to a position that you have, oftentimes, not always, but oftentimes, that's the best time to add or to even just hang in there. I was talking with Lynette Zhang. It's been a while, 5, 6 weeks ago, and she said something that really resonated with me. And I think I heard you say the same thing, and that is, it feels real crazy out there in the world right now. And she basically said, it feels crazy because we're getting near the end. And when we get near the end, it starts to feel real crazy. So I appreciate you bringing that up. You touched on also military use of silver. And I don't know that anyone's an expert or a guru in that arena, but there's been a lot of talk, a lot of noise, especially now with this unfortunate circumstance we have with, 2 wars going on in the world, that the military, not just the United States, but that would be in the entire world, that a lot of silver goes into and is critical component in a lot of these defense technologies.
Yeah. I mean, each warhead missile has about a monster box worth of silver, about 500 ounces just on one tip. Now, mind you, it's not just our military, but the militaries from around the world that need this supply. And so all of a sudden, if this regional conflict becomes a global one, it really changes the name of the game, and it would explain why a lot of these countries are really starting to hoard gold. Why are these central bankers hoarding gold? Well, they're hoarding gold because they're going to have a mechanism to exchange to obtain silver. And I think silver is the key thing that everybody's missing. It's such a small market cap. The market cap is almost micro cap for how much silver is mined on an annual basis, about 1 billion ounces at 25 billion. That's a small to medium sized company on an index. So for me, that's from a military perspective, there's nuclear submarines, there's satellites, any form of electronic communications are going to require silver, to the point where the Navy published something last April that said that they're in such a critical shortage that they're going to be relying on lithium instead of silver. Now, look at the price of lithium. Lithium's gone basically parabolic. However, they can obtain supply. So if the military is that concerned about the supply at the current pricing, and they're looking at alternatives for some of their technologies to switch from silver to lithium, how rare is silver? And, Andy Schechtman said recently he's dumbfounded by the retail numbers and how he's able to still, and how precious metals dealers are able to supply the retail market. This could very well be a case of, these mints around the world doing this last push to retail investors before the price goes up. Because at the end of the day, some people within government are good and they want people to hold silver. I'm a big proponent that every household should have some form of physical silver at minimum. So from that standpoint, the affordability is there for the people now, but the time to prepare your homes is pretty much over. I mean, a lot of people have been talking about preparation now, really since the pandemic, when prices, everything kind of crashed and people were able to scoop up assets. People should have been buying homes. At this point, the game of music, I look at it as a game of musical chairs. The game is almost over. Like you're kind of watching the person go over and they're about to push the stop button on the music, and there's only a few chairs left. So like now is yesterday is when you should have been fully prepared, but today is better than tomorrow.
Yeah. Like they've gone over and acted like they were going to push it a few times now, but we know the push is coming because the game can't go on forever. So I have a question for you.
Sure.
Am I a silver pumper? Right. I talk about silver all the time. Some people will, excuse me, come back at me and say, "Oh, you're a silver pumper." But when I hear what you just said, and I factor into that equation facts that I know that on an annual basis, the amount of silver, at least last year, being mined by the silver mining companies actually decreased. I had the good fortune of talking to, 4 CEOs in the last 2 weeks from silver mining companies. They all tell me the same thing. It's becoming, it's harder and harder to find new silver deposits in the ground. Cost a lot of money, takes years and years to develop it. That's if they are even able to find it. It just feels like the price of silver, I guess if we look at it like a game of musical chairs anyway, like they are getting ready to press the stop button and that we could see a big reset in the silver price.
Yeah, and that's the $1 million question right there is when, when does that price go up? And at the end of the day, the bankers are really the ones that own the interest to a lot of these companies. They own a lot of the royalties. I've worked for 2 separate, trusts that establish, they run out of Canada and then they run internationally, and they're very intricately intertwined, but a lot of these assets are owned by just a handful of a few players. I would say someone that's very wise right now to listen to would be someone like Rick Rule. I respect Rick tremendously. He's starting a bank, but he has a lot of significant interests, and he has shown he's been someone that's been in this market for 40, 50 years, far older than I am. And he has a lot of wisdom, and he's pretty much echoing how I feel is, hey, look, we're almost there. Can you time the bottom? No, that's a fool's game. You might get lucky and dollar cost averaging on the way down, but you should never go all in or all out, but have some dry powder prepared. Personally, I'm short the NASDAQ a little bit, and I've been raising cash for a year and a half. And I have mostly silver in my portfolio and some silver stocks. And as a former financial planner, having been in the industry for as long as I have, to most people that they would say, you're breaking every rule, that you shouldn't put all your eggs in one basket. You should have this 60-40 mix or whatever that they're pumping out. And at the end of the day, these I kind of want to stick my neck out and say, look, no, I am so in this and I totally believe in it, that I'm going to put my money where my mouth is and actually allocate my money accordingly. And if I'm right, I'll do well. And if I'm not, well, hey, silver will still be needed in practically
Right.
every industry, every application. It's really, it's the perfect, some people say it's the antidote to witches and wizards. The silver has no end in terms of its applications, medicines, the technology. It's the best conductor of electricity. And what more is there to say about silver? If everybody hates it, then I want to be the contrarian. And if anyone wants to call me a silver pumper, then I guess I'm guilty as charged.
So I have a question for you, Dan. That 60-40 mix you referred to, like in my case, does that mean I have 60% in physical silver and 40% in mining stocks?
Oh, I'm talking. Yeah,
I know.
I'm
I
talking.
was joking.
Yeah, the old model of 60% stocks and 40% bonds, that has not worked now for a couple years. I don't
Right.
anticipate that to work here moving forward. And if you know what, if it's so hard to change habits, and if you have a target date fund or you have an index fund in a 401k, or it's just sitting there, it's so hard to change it and do something.
Sure.
So I always used to tell clients, look, if you can't do something all at once, start working baby steps. 10%, 20%, 25%,
Yeah.
33%. Come up with an allocation where you say, if you look at it visually from a pie chart, okay, you know what, I can take a portion of this and I'll do something different with it in the hopes that I do well. And if I don't do well, then, it's because precious metals isn't going to be for everybody at the end of the day. I mean,
Right.
that's to our benefit, I guess, but now, if it becomes money, that's a different. Well, it is money,
Right.
but if it becomes legal tender again, widely accepted, that's a whole different story. But that'll probably take a few years, anyways, to transition to a new kind of system like that and get full
Yeah.
adoption.
If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
I'm not giving financial advice. I'm no longer Series 7. My CRD was 5823070. I'm no longer active. So anything I provide is my opinion alone.
Right. But, and we've got a lot more to talk about in this video, but if people do want to talk to you, they can reach out through your website. Is that accurate? Is that the best way to get a
Yep,
hold of you?
absolutely. Yeah, thank you. Yeah, so they can visit me. So it's www.danieltinkham.com. That's DanielTinkham.com. You can reach out to me for free. We can talk. We can set up a consultation. My full-time job, I'm raising capital for an oil and gas company. So really, I'm calling it the hard asset movement. So precious metals is your base. That's your solid foundation. That's your real money that you obtain pretty much anything you want. If you have 1,000 ounces of silver, you're gonna, pretty much have your own kingdom in your little area of the world. More than that, and you'll do even better. So that's going to be your base. But from that, you need energy. So for me, leaving the former business I was in to come to work for an oil and gas company was super exciting. Because not only do I believe in oil and gas, but the whole mantra of ESG is a load of crap. People are really starting to wake up to the BlackRocks, the Vanguards, the State Streets, their hidden agendas. They've been pushing this ESG and the solar and I'm not against solar. I am kind of against wind, but solar can have its applications. Particularly with certain power tools and household equipment, things like that. But the free market should dictate and determine how much someone's willing to pay instead of trying to incentivize the whole credit system. But for oil and gas, there's 6,000 different products that require oil in one way, shape, or form.
Yeah.
My home's heated with home heating oil, which is diesel. So it's something that's never going to go away. I was reading something that there's been over $5 trillion spent on ESG over the last 30 years. And what they have to account is that oil, gas, and coal has gone from 82% to 81%.
Right.
Was that a good investment? You tell me. I don't know. We're 33.7, 0.8, 0.9, 30. I don't know. It goes up by, it seems like 100 billion a day lately. Pretty soon we'll be talking about 40 trillion. And, our shiny will just keep getting shinier. And, but for oil and gas, to me, it's a clear winner. And so I'm representing a company that's raising capital, and we've already raised 120 million, and we're going to raise 200 million by the end of the year. So we're looking for accredited investors who believe in domestic production. We're only in Texas, Colorado, and Wyoming, so we don't do anything international. We don't do any federal land. So we try to control what we can control, but most of our operations is in Texas, which is basically in and of itself its own country. So no matter what happens throughout the rest of the United States, Texas is really still going to be the lifeblood of the people. At the end of the day, we can export, through the ports. around the world. And so I'm super excited about oil and gas. And then I have no vested interest in telling anyone other than I really like uranium. I haven't quite pulled the trigger on anything yet, for full disclosure. But the physical uranium, as well as different uranium ETFs. Again, it's a play on energy, and there's going to be small nuclear reactors that are going to be built under Trump's executive order. His last day in office, he signed an executive order allowing for much smaller nuclear plants. So by 2029, 2030, those are going to become much more commonplace. And the malinvestment in uranium has just been, awful. And you look at Kazakhstan, there's a lot of problems at the national uranium company there. So the supply issue is only probably going to get worse. And as Sprott keeps buying up more of the physical, so for me, it's precious metals, oil and gas, uranium. Hunker down. Do you want 25% of that in your portfolio, 50%, 100%? That's really up to you as an investor. I allocate things my way, just from how I see things, but everybody should sit down with someone, have a good understanding of their situation, and just to make sure that you're on the right track.
I've been buying silver for decades now, and I've never sold an ounce of silver. Not that I wouldn't convert some in the future, but more now than ever, when I think about the physical silver that I hold, I feel like, is there downside risk? Certainly, right? But realistically, I'm very confident that it will, at minimum, maintain its real value, right, where it is right now, and that there's an opportunity that, and it's not just with silver. I think it's with oil and gas, like you mentioned, and uranium as well. But for me, with silver, I just feel like it's going to hold its value, and then there's this option that it could save me at some point. And when I mean save me, it could literally save, could be used for basic necessities, and even an option that it could realize even greater real value as well. And I don't know, I feel comfortable with that. Let me ask you this question. We know what's going on geopolitically in the world, right? We could talk about that for hours. Things are very contentious right now. The world is changing, bifurcating, BRICS, BRICS plus, all that good stuff. If we just focus in on the United States, you had some really interesting thoughts and ideas that you share with me regarding kind of what's going on fiscally, monetarily within the United States. Do you care to talk about that at all? Because I thought you had some good insights that we do live, and many of the people joining us right now are U.S. citizens, and I think that most of our cohorts are asleep and don't even realize the kind of contentious, I don't know if that's the right word, scary situation that we're in. Any ideas on that, Dan?
Yeah. So for me, I was taking some notes here last night, and I'm pretty convinced that pretty much everybody within government and most of the elites are either Marxists, communists, fascists, or rhinos. And I'm calling for basically pretty much rounding most of them up. And, the message needs to be sent that treason doesn't pay. And I see treason all over the place. It's like almost it's like numbing. And to me, that's just, I have 5 children, someday I'll have grandkids and great grandkids. I don't want them to be slaves. And at the end of the day, silver is really the only key that I've seen where they're not going to be slaves. And all these other projects, oil and gas, uranium, everything else, it's great. But silver, at the end of the day, is going to make sure that my grandkids aren't slaves. I built my house on gold and silver, and I would actually encourage you, Ron, to try to sell some of your silver sometime. I've been buying silver since I was 14 years old. It was 2003. It was $5 an ounce, but people were giving it away for $1, $2, and I was hoarding it. And I held on to a lot of it, and I sold it in 2011 for $48 an ounce when I saw the signs, and I said, hey, wow, I can buy real estate with what I've been able to save. And I was 22 at the time. And so that's how I set my foundation was, when that opportunity exists to spend it, then spend it. Yeah. And I've actually, and I did that years ago, and, it self-perpetuates. And now I've been able to build a beautiful home, build a family with what I've had. And I'm essentially I'm doing the same thing in reverse. I'm just holding on. And, when my silver can buy me, if a few hundred ounces can buy me, a nice townhouse or home where I can start investing in real estate, silver is going to tell me, the silver and the marketplace will tell me the price, when it makes sense for me to sell, and spend. I don't look at it as sell, I look at it as spend, and there's two key takeaways there. When you use the term sell, now all of a sudden, now the IRS is like, oh, you sold something, we're looking for profit. No, I didn't sell it, I spent it because that's money. And, so therefore, it shouldn't be taxed, which is, there's lots of legislation, lots of people that are fighting that good fight. And that really should be done at a state level. But ultimately on a federal level, gold and silver really need to be returned as money, but that can't happen until the Federal Reserve and the IRS are decommissioned and, essentially eliminated from the picture.
Yeah. Or convert. I like to use the word convert. I again, don't give financial advice to my viewers or the people watching here, but the last thing that I want to do is sell my silver for fiat money at some point. I say if the window, like you talked about, and congratulations, because you did a good job of recognizing a good time to harvest value from your silver when it was $48. That if we do have a situation where the market gives us an opportunity to convert some silver into something, like you said, real estate or some other real asset, but not necessarily to convert it into paper money, because in the long, I mean, you may have to temporarily do that to facilitate a transaction occurring, but you want to convert it from one thing to another real thing.
Exactly.
First Mining Gold is a development company advancing two of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects.
We're going to convert it into really so I look at this as a form of dynastic wealth. So what is dynastic wealth? Dynastic wealth is 300 years. So basically someone accumulates enough assets and then they use it in the right way where it'll actually last for hundreds of years. I think there's a trust in England that I think it's King Edward VII, or there's a trust that's been around since like 1450, and that trust still has lots of assets. So from a dynastic wealth standpoint, it's gold, it's real estate, and it's super rare collectibles. That's kind of your three-legged stool for wealth. Now I use silver as that mechanism now because I'm eventually going to be able to exchange my silver into gold at a far better ratio. So my target, I'll start giving some predictions, but I'll drip them in slowly. Silver will be between 10 to 1 and 20 to 1. That's historically the norm. We're at what, 80 to 1, 80 something to 1.
Yeah.
So if gold, if they do nothing, my silver is going to go 4x for me, just observing that and recognizing that. And when it comes back to its real average, I'll make a 4x return by literally doing nothing. So then I'll exchange it into gold. Some other things I'll exchange into real estate. So I'm going to be looking at high quality real estate. I prefer local. Some people have different philosophies on that. Go invest in Texas or Tennessee or Florida or dabble wherever. I'm a little bit more of a creature of habit. I live 8 miles from where I grew up. I tend to know the Southern New Hampshire real estate market very well. So at that point, I would be looking at unique opportunities in Southern New Hampshire, Northern Mass, things like that, and then super rare collectibles. That's a lot harder to ascertain. If you ever come to New Hampshire and come visit the basement, I'll show you some super rare collectibles that I won't put on camera.
Okay. Yeah. So those are real, but those are all real assets you're talking about.
Those are real assets that people will want no matter what the circumstances. So if the wealth is in Saudi Arabia, or the wealth is in China, or the wealth is, anywhere,
right.
There's a group of people around the world that you own an asset that is so rare that everybody wants it, and they'll pretty much, it almost becomes a case of, well, oh, you pay $1 million, I'll pay $2 million. And that's where you see the art market kind of going haywire, because there's only so much artwork from 1700 that's hanging around that is considered a masterpiece. So from that standpoint, You know,
Let me interject something quick, because you talked about this concept of dynastic wealth, 300-year wealth. I think it's important for us to point out that no one has ever achieved, and correct me if I'm wrong, dynastic wealth by investing in fiat paper money. Because if you think about the last 300 years, I don't know the exact number, but you can probably could probably refer to hundreds, if not maybe even thousands, of different paper money, temporary fiat money systems that have come and gone during that period. And I want to point out something else as well. You talked about earlier that you converted some of your silver at $48 per ounce back in 2011. That would be, had you converted that silver into paper US dollars at that point, and held them, right? Held paper, stack of $100 bills. Today, those $100 bills would be worth significantly less than they were in 2011.
Yeah, absolutely. And there's a book written by Ralph T. Foster. He lives in Berkeley, California. He's probably one of the only sane people left in Berkeley. He runs a coin shop there, and he actually wrote a book. There's over 1,000 currencies that have all gone to zero, every last one. So there's 100% probability that if we don't have anything backing our dollar, and some people say, well, it's full faith and trust in the United States government. Some people say it's the military, both of which I say are not looking too good right now. And ultimately, if that trust is broken, eventually something's gonna have to step in. Even in the Weimar Republic, they eventually had to come in and say, okay, we're gonna, try to peg it to something to balance things out. So gold and silver, if it's a 10% backing, 20% backing, they won't go straight to 100% backing. But when I give you some of these predictions, I use some assumed models around if they back at 10%, if they back at 20%, things like that. But yeah, that's a great book to I mean, the dollar is on its way to zero at some point. It's a slow bleed. It's been 98% over the last 110 years, and then that last 1 to 2%, it can drip, and then all of a sudden it just happens, and it can happen a lot faster, and it will happen a lot faster, because back in the day, word still traveled fast, but not nearly as fast as it does today, where essentially within a few hours, the whole world can pretty much know almost everything that's going on.
Yeah, that's a great point. I know that even played a factor in the Silicon Valley Bank, the bank run. I heard somebody say, like, it used to be if there was going to be a bank run, everybody had to line up outside the bank on Monday morning. Now they get on their phone and transfer all their money out in the matter of an hour. So yeah,
it's a virtual bank run. And that's the scary thing too, is that any bank can have a virtual bank run. And especially where, the Fed is introducing, CBDC Lite, where they're saying, well, it's a faster payment system. It's an instant payment system. Well, if it's really instant, that game of musical chairs that just, it basically broke the whole game because now everybody can move money, extremely quickly. If anything, the slowness of the system is what kind of kept it in line, which, do we want the system to come down? We do, but we don't want it to collapse society. We want to be able to transition into something in an orderly manner. So the collapse can't be too slow, but it can't be too fast either. It's a delicate situation. And we're in the thick of it. We're in the fog of war. And if people are sitting there wondering, gee, things seem a little foggy, or I'm not sure what to do, or you're not the only one in that boat. And I have a good pair of night vision goggles, where I can see things that other people can't. And God has given me that discernment and that training to be in the system that I was in for as long as I was. And I just consider that a gift, and I'm sharing it with your followers today.
Yeah, well, we certainly appreciate it, and we want to get to your predictions. But I want to say this: if things seem a little foggy, that's because things are a little foggy. And if things seem a little crazy, that's because things have gotten a little crazy. So
yeah, when they declare we're in a recession, we're already in a depression, really. So when they declare recession officially, if it's a depression now, I wonder what they'll call it when it's actually a recession.
Oh, come on, Dan. We just heard the economy is expanding at 4.9%. Everything's great out there. We're in great shape. Everything's wonderful.
I'll go out on a limb and say that I think the Fed's going to raise rates in November.
Oh, really? Okay.
Yeah. I don't know. I think the odds definitely went up. I could be wrong, but I think they're looking at that GDP number. What was it? 4.9.
4.9. Yes.
That's totally fictitious. Something that the chief growth officer of the company I work for recently discussed was that we only didn't go into a technical recession last year and this year because we've been exporting so much oil and natural gas overseas. So those numbers have been able, because the export, any export gets added to your GDP. So they've been selling, a whole lot of oil and natural gas, including draining the SPR. And I think that could have added to GDP. I don't know the technicalities around it, but it's all at this point, it's all manipulated. The numbers are manipulated.
Yes.
You know that. I know that.
That's what
I'm preaching to the choir.
I probably shouldn't go down this rabbit hole, but I'm going to try, and then we can cut this off if it doesn't work. But nonetheless, you talked about the potential for the Fed actually raising rates, which is 97. The odds are a 97% chance that they're not. And I understand why you're saying that, but I want to see if this makes any sense to you whatsoever. Could we get to a point where the Fed is on a nominal basis, I guess you would say, raising rates, but at the same time, I guess because inflation and because the devaluation of the dollar still is continuing at a more rapid pace, that in real terms, the system is still continuing. Like, have we gotten to a point, because there's so much debt, that sure, the Fed can raise rates another 2% from here. That's great. But on the other side, things are falling apart to the extent that it doesn't matter that they raised rates by another 2% or 3% or whatever. Does that make any sense?
They'll try to put lipstick on the pig on the other side. So what I think they're going to do is they're going to raise rates, and they're going to go from QT back to QE. So they'll do both. Yeah. They can raise. Yeah. I mean, that's the thing. The Fed always says, "Oh, well, we have tools in our toolbox." Well, they can raise rates and print money. And I haven't really heard anybody talk about that concept, and I don't quite know if they have or not. But there's a lot of central bankers in there. Again, they're part of groupthink. They have usually one mindset. When somebody introduces a new idea, it has to get run through the gauntlet with the central planners, who the gurus of the world. But at the end of the day, I think that's probably, if to try to hang on to their system as long as they can, they'll probably keep raising rates and money, and do the money printing. And then the next round of money printing is going to be spectacular beyond what anyone, because again, if they have to bail out half of all the banks, I mean, now we're talking into the many trillions. And again, they conveniently passed a measure where there's no debt ceiling now until January 2025. So we'll see what happens. My silver likes that. I mean,
Well, let me ask you. So my analogy for what you just described is like, it's like the Fed has a fire in their house and they're trying to put it out. And in one hand, they have a fire extinguisher, but then secretly with their other hand, they're fanning the flame, right? Like, oh, look, we're trying to put the fire out. Or, a couple years ago, I have twin 11-year-old daughters. They wanted a magic set for Christmas. I bought them a magic set that has 48 different tricks they can do, right? And they learned how to do like 2 of them. And isn't that like the Fed? Like you talked about more tools in their toolbox, but maybe is it also accurate to say like they've got more tricks in their magic set? Because really, when you think of tools, you think of actually fixing something. But when you think of a magic set, you think of illusion and trickery. And I think maybe it's more accurate to say that a lot of what they do is illusion and trickery.
Yeah, their tricks are a facade. So it's actually quite simple. I've broken that down into the most simple common denominator. It's problem, it's reaction, and then it's solution. So they spend sometimes years to create the problem they know is going to happen. And then when the problem does happen, everyone reacts, and then they have the solution for it. And that's what they're going to do with CBDC. And people have to resist and say, no, we're not doing it. Paper cash. I know it's a Federal Reserve fiat note. I know no one likes them, but the paper is we still have to use paper currency as much as we can, at least until the new system transitions somehow, which I have some theories on that. But for right now, if we just stick to the all digital, they're going to usher us right into the full CBDC, and then they'll just be able to decide if, you know, Ron, you had too much meat last week, so you can't have meat this week, and you'll go to the store and guess what? It won't work.
As
and
long
then
as they don't cut,
your
as long
silver
as
is
they
really
don't
gonna
cut
be
me off
valuable.
on my, as long as they don't cut me off on my ice cream. That's ice cream and chocolate. Those are my
Yeah.
downfalls.
Yeah.
So,
Nothing like a good
so
coffee Oreo with 16% butterfat.
right, exactly. So what are some of your predictions for what we might see coming down the pike?
Yeah, all right, we're going to get to the fun part. So for gold, I came up with a few different scenarios. So for gold, the absolute minimum it should be at right now under the current fiat system is 3,400. And
Okay.
I come up with that number pretty simply. So I looked at the 1980 peak, and it was about 850, and we're at 30% to GDP.
Mhm.
What are we at now? We're at 121.6. We'll call it 120 for rounding. That's a 4x. I did 850 times 4 because
Okay.
that's how much the debt has gone up. So when we get 3,400 for that, you could essentially do the same multiple for silver. So if you use the same formula for silver, silver should be at 200 under that current formula. Really no exception. So the fact that they're keeping it down, it's all derivatives based. Now I've used some assumptions, but you guys, you know, as your viewers and you can play around with the numbers. I used an assumption of 100 trillion in debt. So it's going to cover all the government debt, all the credit cards, pretty much everything for the most part, except for derivatives. And then I'm taking that number and I'm trying to estimate how much gold is in the United States, and how much is owned in Fort Knox, how much is owned in private hands. So I'm assuming there's 8,000 tons at Fort Knox. Let's not go down that rabbit hole. And I'm assuming that the population has a similar amount. Let's call it another 150 million ounces of gold between the whole population. Maybe it's more or less, but let's say it's here. So I just take that 100 trillion divided by 300, which is 300 million ounces, by the way. So I added, how much, 8,000 tons private, 8,000 tons at Fort Knox. So that comes up to 300 million. Take 100 trillion. If you've ever done the math before, it's 12 zeros.
Yeah. It's let
so
me interject something that one of my viewers repeatedly reminds me of.
Yeah.
A trillion is a million.
Mm-hmm.
Let that sink in. Okay, sorry, I won't interrupt you anymore.
Yep. No, I appreciate that, because now what's 100 trillion is then 10 million.
Yeah.
So 100 trillion is 10 million. Okay. Now that we've got, and pretty soon we should, so the next level is quadrillion. So in a hyperinflation, quadrillion and then quintillion and then septillion. Okay. So we hopefully we don't get down that road. But so if we do 100% backed gold, 100 trillion divided by 300 million, that comes up to $333,333 per ounce. Let's say there's a billion ounces that are backing that at 100%, 100 trillion divided by a billion, that's 100,000 an ounce. So I'm going to be very conservative. And let's say there's a billion ounces of silver in the US. Okay. And let's say it's 100% backed. That's 100,000. At 40% backed would be at 40,000. 20% backed would be at 20,000. So let's say the government says, we're going to back it 10%. The price should spike up to 10,000. But let's say they do 20% backed. That's at 20,000. Ultimately, that's going to cause force majeure. All the derivatives contracts nullify. To me, the way I look at it is, in science terms, think of matter and antimatter. When they collide, there's only 1 in a billion left. The derivatives contracts, when they blow up, essentially the regulators can come in and say, oh, those are a little magic trick. We're just going to cancel all of them, and then there might be a handful left that they can figure out what they're going to do with. But the gold silver ratio being at between 20 to 1 to 10 to 1. So let's say it's 20 to 1, and let's say we're using a 20% backed. That's $1,000 silver. So that's where I'm getting those numbers. So I'm saying very conservative for silver, 200. At a 20% backed system, should be 1,000. Could be more or less than that, but those are kind of those are long-term numbers. That could happen in 2 days. That could happen in 5 years.
Right.
It could take another generation if the bad guys keep the system going the way it is. So it's really hard to know. But at $1,000 silver now, now we can start talking, and everybody can start rotating their wealth into other things, because people need money. And again, what is real money? It's gold and silver.
Yeah.
It's like this catch-22. It just keeps going round and round. So, and those that can recognize it can actually do something and then be patient about it will fare far better moving forward.
And I think a lot of us and a lot of people probably everyone watching this video, we've been so conditioned that the value of, if somebody's in Europe, the euro, if someone's in the United States, the dollar, that it has this quote unquote value to it. That we forget about the fact that it really is, like you said, I mean, it's make believe. It's based on nothing at this point except confidence. And so we hear these numbers, and I get blasted all the time for saying, "Oh, we could get $65 silver," and people are like, "Oh, you're crazy! You know, how could we get?" I'm like, we could get $650 silver. We could get $6,500 silver. It's just, go talk to someone in Venezuela. Go talk to somebody in Turkey about what happened with the gold price over the last 5 years. I mean, like, these things do happen. Am I saying it's going to happen today, tomorrow? No. I mean, could it happen? Could it happen next month? Possibly. Could it happen next year? Could it happen 10 years from now? But the reality is, I mean, and like you said earlier, hasn't the US dollar already lost 98% of its value since what, 1913, roughly?
Yep. Perception is reality. I think to that point, the people in Argentina, the people in Venezuela, the people in Turkey, they get it when they come here. Even people from Cuba, you go down to South Florida, and a lot of people understand gold and silver. They're wearing it. You'll see, people around the world that wear their wealth around their neck because they don't, if the government wants it bad enough, well, they're going to have to, rip it off, my neck to basically take it. And, especially India by far and away has the most gold and silver on the planet. I like, particularly I really like the oil and gas project I'm on now, because it's a mechanism where oil will be traded for gold. And then gold can be traded for dollars. So if you can be, it's like, George Collins said, it's one giant club and you ain't in it. Well, that's going to be the new club. And if you can get in before the club really starts and the bouncers out, then you're in. And that's really those mechanisms. You want to align your portfolio with things that are going to be part of that new system, no matter what happens. And that's really the beauty of that.
Yeah. Well, this has been great, Dan. I can't help it. I have two quick things I want to mention.
Sure.
And we'll talk about this maybe in another video, but I was meeting with a couple kind of top level analysts in Toronto a couple weeks ago when I was up visiting a gold mining project. And one of them explained to me how really effectively right now in China, you can sell oil for gold because of this petro yuan contract, and then with the Shanghai Gold Exchange, immediate convertibility. That, like, if Saudi Arabia sells oil to China, they can then immediately take that yuan and convert it into gold. There's essentially right now the very beginnings of a oil for gold, I guess more within this BRICS framework, but that it's happening, right? And oil is huge. Oil dwarfs any other market as far as I know, and that's a big deal.
Yeah, over 100 million barrels a day are consumed, multiplied by $85 a barrel. Just do the math, and that number is only going to go up. By 2030, it's going to be over 110 million barrels per day, and virtually all of the increase is coming from developing countries. So you pretty much, most of the G7 is more flat at this point. We're consuming about the same amount. Some countries are even going down a little bit, but the vast majority of the growth will be the developed nations. So the developed nations really have a vested interest to join the BRICS alliance to be able to, be part of that mechanism. Do they want to be part of our system, or do they want to be part of that other system? And I think more countries now every day are looking at it as, hey, let's join the BRICS, and I'm sure there'll be flaws, and there's trust, there has to be trust mechanisms instilled within those marketplaces for them to function effectively. But think of it kind of like starting a really old car. You're tuning it up, maybe it's got a carburetor, you got to clean it, you got to go through it all, and then finally you go to start it, and it's it's really hard. That's where we're at right now with that particular market, where they're starting something that's antiquated, that hasn't been used in a long time, that basically there's a whole new generation of mines that have never really they're like, oh, what's this old barbaric relic? Even
Yeah.
folks within the industry I work in, it's just trying to teach them about here's what it can do, and but I'm excited to see how that plays out. I hope the United States can beat BRICS to the punch and say, hey, you know what, we're going to make our own system, we're going to make it better, and we want to maintain the reserve currency. Do I think that's going to happen imminently? Probably not.
Yeah.
It is, especially with the government that is currently running the show now. If they're, depending on what happens next year, then all bets are off. If great ideas come to the table and we can actually start fixing this country again, we can save our republic.
Yeah. And I'm not speaking for Dan when I say this. I'll speak for myself, but I have a suspicion that you share this. We are critical of what's currently going on in our country. And I think that at least for myself, when I say that, like I consider myself to be a very patriotic American. More patriotic, though, like in the form of what our founding fathers had envisioned for our country, and not necessarily what seems to have happened in, let's say, the last 50 years, and some of the decisions and actions that have occurred by our current politicians. But I do consider I love America, and I want, I think back to like pre-1971 and periods in our country's past when we were using gold and silver as money, that we had a lot of success, and that it saddens me. And you said this earlier. You have children. I have children. We'll have grandchildren. I want my kids to live in a fair, just world, where that's maybe free from some of the manipulation that we've seen in the last manipulation and illusion that we've seen in the last several decades.
Yeah, and it takes one person at a time, and I do believe that one person can change the world, and it's just really about sharing ideas that are worth sharing at the end of the day. And you took a risk to start your channel, and now it's morphed into what it is, and you'll keep going along. As you said, you're gonna be online every day until the day you die. So trying to help, and you're on every day. So it's a blessing to have you here. And now that we're all in this virtual world, I hope we get to meet up someday. Come visit my basement, and we'll hang out, have a cup of coffee. And
I will.
If I make my way to St. Louis, I'll swing by.
Absolutely. You'll be an honored guest here in the basement, Dan. And I get a lot of flack. I actually have made several friends up in your area because I say New Hampshire and it's New Hampshire, correct?
Yeah, New Hampshire. If you're from the Minya Merrimack Valley, which is where my ancestors have lived for the last 150 years, or it could be the proper New Hampshire. But it's definitely not New Hampshire.
Well, you know me. I'm in the basement. I am Mr. Prim and Proper, so I'll make sure I practice my pronunciation. On behalf of everyone who's joining us right now, right? Because it's you and I talking, but there's a viewer here as well. And I know on behalf of them, thank you. This has been a great conversation, and we'll look forward to doing it again in the future. I'm going to put contact information up on the screen a couple times during the video where they can go to your website if they want to reach out to you. You're a wealth strategist, a wealth preserver, and I know there's a lot of people out there who are confused and scared right now, and hopefully after listening to us talk, they've got a little clearer view on what's going on.
Yeah, there's a lot of confusion out there. Happy to talk to anyone about anything. If you have a question about what should I do with my savings, or I'm just here to talk to you, not as a financial advisor, but just as a human. We need to bring that human element back, and by removing my Series 7 from the equation, that's really been able to bring that human status back and not a robotic status. As God says, you can only serve God or mammon, and I've chosen to serve God, and so at the end of the day, I'm following my heart which is the truth, which is a person, not an idea. But I'm open to talking to anyone. Again, it's danieltinkham.com. There's a spot where you can send me a message. You can type away or just have me give you a call. Happy to set up a time to talk if you're interested in, the hard asset movement. If you want to talk about oil and gas, or if you're an accredited investor where your net worth is at least $1 million, excluding your primary residence, our minimum investment is $50,000, and happy to send you some information, our presentation and PPM if you'd like as well.
Sounds great, Dan. We'll look forward to talking to you soon. Thank you.
Thanks, Ron. It was a pleasure.